Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business developments, their context, their relevance and impact. I'm Govindraj Ethiraj. Today we're talking about retail inflation, which inched up in January. Consumer prices rose 5.1% in January, higher than the 4.3% earlier. One of the other things that we're looking at, of course, is the budget impact. Today we speak to two people who will give us a sense of two different sectors. One is information technology, and we shall have R. Chandrasekhar, President of NASSCOM, joining us shortly, and also Sangeeta Reddy, Joint Managing Director of Apollo Hospitals, to give us a sense on what the healthcare sector is expecting from the Union Budget 2015, and that's a lot. Joining me now here in the studio is Debopam Chaudhuri, Chief Economist of ZyFin, and we're going to ask him about what the new numbers for retail inflation mean, particularly in the context of the other numbers, which is GDP, which have been changing, and trying to understand what the composite picture looks like. Debopam, thank you very much for joining us here. So tell us, first of all, retail inflation is up, consumer prices obviously therefore are up. Is this in the context of the fact that IIP, or the Index of Industrial Production, is slowing down, to be viewed differently, or are we sort of assuming too much?
The thing is, IIP, the methodology has not changed. We still have the old base and the old way of collecting data. While in case of national income accounting as well as the CPI statistics, a lot of changes has happened in the methodology. So if you look at the CPI data first, CPI definitely has gone up to 5.11%. However, the good news is it's still lower than what the consensus was, and hence there was no bloodbath in the markets today. Right. And the strange thing is food inflation is still very high. So if you look at the food inflation component, which has around 50% of the weightage, food inflation is hovering around 7%. So that's particularly dangerous. And
but the weightage has been brought down, right? I mean, CPI has been reformatted.
It's still 45%. So right. that's quite a lot.
Okay.
So and food prices are known to be very volatile in a country like India, be it because of crude oil prices, which has an impact on food prices, as well as uncertain weather conditions. So if there are further adversaries which impact food prices in future, then food prices would definitely cross 7%, and that will again have a very significant impact on the general price level.
Okay.
Another interesting thing which I found in the inflation data was, if you look at the breakup that the government gave, urban regions, in case of urban regions, general inflation was lower than rural villages, but food inflation was much higher than the rural regions. Which is
so you're saying food inflation is higher in urban India and lower in rural India?
Yes, it's much higher actually.
Okay. Is that unusual, or is this the first time?
Well, according to me, based on my analysis, this is a direct hint at something really bad, or there is a huge amount of supply mismatch that is happening. That supply, the logistical, the concerns has not yet been addressed by the new government or the new APMC regulations that has been brought into the picture.
Okay.
So by the time food or crop or the food produce is brought from villages to the cities, a lot has happened in between, and hence you see that huge spurt in prices and a different price differential that exists between villages and cities. But this is not the case with the general price level.
Okay.
So that's an interesting point. And in case of IIP, the good thing is IIP is still positive. IIP is known for its volatility, but we have seen two positive numbers for 2 consecutive months. That's a good sign. More than 59% of the industries that has been surveyed in the month of December recorded positive growth, which is again a good sign. But what is worrying is consumer durables. Consumer durables consistently has been performing negatively for the last, I think, 5 months now. And in a country like India, where more than 50% comes from private spending, consumer durables needs to pick up for the overall IIP, to gain more traction or gain momentum and contribute heavily to the GDP. So that's still a concern area.
Okay. So we are, in some ways, despite everything, we are still carrying the lag effect of the slowdown of the economy, regardless of what the GDP numbers now, which are of course revised, might say.
Yes.
Right. Yes. Okay. So let's look at GDP specifically now. There has obviously been some debate about the reformatting of GDP numbers, but and let's put that aside for a moment. But if we were to look at the numbers vis-a-vis industrial output, how do we look at? I mean, are we, because IIP and GDP, at least from a layman's perspective, were going somewhat in the same direction earlier, but now that doesn't seem to be the case. Why is that?
So GDP manufacturing, you are right. So GDP manufacturing should be at least on a similar trajectory as IIP. The numbers would definitely not match because of the frequency and the type of surveys that are being done for GDP and IIP are different. But the trajectory should be the same. But with the new numbers that the government has come up with, it's totally different from the IIP. And an easy guess is perhaps the government is coming up with a revised IIP very soon. with a revised set of industries which would be surveyed from here on, and a new base which would make it much more comparable to the new GDP numbers.
Okay, so you're saying even that's another sort of reformatting we should expect, which might help align everything in one line. Okay, so let's look forward now. So these are the inflation numbers, these are the IIP numbers, these are the GDP numbers as we know them. What should we be looking out for in future, in the next 3 months, and what can we expect, or what should be done to either correct or leave things as is?
Based on our analysis, we are very confident that India is already on the recovery phase of the business cycle. You know, business cycle has various phases. So once after a recession, the first phase is recovery, and after that you get growth. So we are very much on the recovery phase.
Why do you say that?
Because all our data points, for example, consumer sentiment data, which ZyFin tracks on a monthly basis, has been pointing up from November onwards. So that's a very big turnaround, because consumer sentiment for the last 3 years has been on a negative downslide. November was the first month when we saw some good amount of pickup, and it has been picking up since then. Even Narendra Modi mentioned about consumer sentiment turning positive for the first time in 3 months in the recent CEO summit. So that's one good sign. And again, as I mentioned, GDP, 55% of the GDP comes from what you and I spend on the streets, along with the private, the institutional spenders. Right. So if consumer mood improves and they start spending more and buying more on the streets, definitely this is going to have a huge amount of positive impact on both the IIP consumer durable section as well as the overall GDP manufacturing section.
Okay. So what about the inflation trajectory? I mean, that's the other question. I mean, how do you see that?
That's right now really difficult to predict, but then our sense is what we do at ZyFin is so the government has a basket of goods and services on which they collect prices on a monthly basis. So what we have done is we have replicated that basket of goods and services. We have taken the top 50% of the goods and services, and we track prices in the top 4 metros, the Delhi, Chennai, Calcutta and Bombay. Our analysis suggests that inflation, because of food inflation, would hover around 6.2 to 6.5% for the next 2 quarters at least, before starting to subside.
So CRISIL, for instance, has 6.5% for the fiscal.
Yeah.
Okay.
So it's pretty much on the same line, I would say then.
Okay.
So there's no chance of a significant downslide in inflation for the next 2 quarters at least, is what our sense is.
Okay.
But that should not impact the recovery in the GDP or recovery in an IIP, because again consumers are getting back to the market again, which is being, and they're lured back to the market because of improving employment sentiment.
So if I were to take the headlines from what you're saying is that because regardless of what inflation may be, consumers are coming back, and their sentiment to purchase should improve or will improve, and therefore a lot of other things, including the index of industrial production, should look up.
Yes.
Right. Yes. Okay. So let's look at the monetary policy response, if there should be one. So are we to sort of continue to expect a reduction in interest rates?
Well, if you ask me, I don't see the data has changed any significantly to prompt a cut or adopt a easy monetary policy as of now, because food inflation is still high, and there is significant risk that food inflation will go further higher from this point onwards. Also, the GDP is doing pretty well as per the government.
But a lot of economists are actually saying the other way around, right? I mean, they're saying, okay, if you look at the aggregate, including lower oil prices and so on, I mean, the Reserve Bank should be actually cutting rates or continue to ease rates.
Well, the issue that India faces right now, even if you talk about the inflation issue, based on our understanding, this is a cost push inflation. This happens when there are supply constraints. It is not something which is being caused because there is a huge amount of demand in the market.
Sure.
RBI or monetary policy can work best whenever there is a demand push inflation. Inflation is happening because there is a lot of demand. So RBI makes the money supply stricter, and the demand comes down gradually. But that is not the case right now. The problem is there are a lot of supply side shocks, be it due to subsidies or be it due to lack of proper transmission of food supplies, etc., which is causing the inflation to happen right now.
Right.
So monetary policy may not be that effective, and Raghuram Rajan may not be keen to cut rates given.
Because RBI is also saying that finally they're watching the same data that everyone else is.
Let me just add to this. The other problem is globally there is some deflation which is happening, and globally central banks are adopting easier monetary policies. So this will lead to global rise in price levels also, which will have an impact on India since this is a globalized world. So definitely inflation risks are still there, is what my belief is, because if global prices rise, the impact would be on India, and then again Indian food prices are volatile anyways.
Okay, so we've also got a budget coming up, and we're getting a few more reactions on the budget. But what's your sense? So should there be some sort of fiscal response in the near future to all of this?
I don't think the government has any other way of tackling the budget apart from showing some amount of fiscal consolidation. I don't think there will be major tax stops, but there can be some tax stops in order to boost Make in India, because Make in India is one big channel through which you can also woo international investors, saying that, hey, look, Indians are investing in India, so why don't you also invest in India?
So that's the supply side, so you're saying, but the demand side, you don't need any more incentives, cuts?
Demand side, I don't see any cuts or any subsidies or any expansion of government expenditures coming in this current budget.
Okay. Anything else on the demand on the fiscal policy side?
No, not really. Just that the government needs to make sure that since GST will be rolled out next year, that's what they have been saying, the tax system starts to give some feelers to the Indian industry by what to expect next year, by including some aspects of GST in the current budget as well.
Right. So you're saying continue to create an environment where there is investment going in and production happening and increased output, but don't necessarily tinker with interest rates right now.
That's
if I got you this thing, and everything else will take care of itself, or some of the things will take care of themselves, because consumer sentiment is improving, and that should trigger a lot of demand down the line.
Absolutely, yeah.
Right. So that's a good note to end on, Debopam. Thank you for this. We're going to take a break, but on the other side of the break, we're going to be talking to two people, one from the IT sector, President of NASSCOM R. Chandrasekhar, and Sangeeta Reddy, Joint Managing Director of Apollo Hospitals, for their respective views on the Union Budget 2015 that's coming up. Stay with us. Welcome back to Policy Watch. We are tracking the Union Budget 2015 now, and we've been talking to a whole bunch of industry sectors and their representatives to understand what they want or need from this process. We spoke to President of NASSCOM, R. Chandrasekhar, to understand what the IT services industry wants from the budget, not just for the large companies, also for the small companies who are the new engines of growth. I began by asking him what his expectations were.
We always expect something from the budget, because
what would you like?
Because this is an area which is extremely important for the country. It's one of the most important areas of the economy today. Contributes about 8% of the GDP and employs more than 3 million people directly, 10 million people indirectly, and so on. So I think the key thing in the budget is what can we do to really stimulate the growth of this sector further, and how do we do it in such a way that it adds to the multiplier effect on the economy. So there are two main areas that we have talked about. One is the small entrepreneurial and product and startup companies which have been the brightest star in recent times within this sector, and which have in a sense lit up the sector with their energy and their innovativeness. And today we are the fourth largest startup ecosystem in the world. Within a year or a year and a half, we will be the second largest in the world. Does that mean that everything is hunky-dory in this area? On the contrary, we are also seeing simultaneously the movement, or the exodus, if you will, of a lot of these companies moving to other countries. The moment they move, we lose the entrepreneur, we lose the economic value that they are creating, we lose the multiplier, we lose the employment that they are creating, and we lose all the economic benefit.
So what's the one or two reasons?
What we have actually said is that we need to do certain things to prevent this from happening. We need to look at some of the taxation issues, the way in many cases the products are being taxed, both for in terms of the service tax as well as in terms of the VAT, like in goods. The second thing is, for these companies, they as it is have a lot of problems in raising capital, because they don't have tangible assets, and mostly they get funded by venture capital or angel investment. And then you have an incidence of TDS which further aggravates the problem, because you are actually deducting tax, going through a long cycle to get that money back, when it's known that you don't have to pay any tax eventually. So that makes it harder. The third is a lot of regulatory requirements, where the regulatory compliance requirements of a small startup company are similar to that of a large company, and makes it very difficult for them to function. Even today we had in a lot of small companies in our own AGM pointing out that this is something must be done about it. The other important part is the way we tax the investments which are being made. This sector, as I mentioned, depends mostly on venture capital and angel investment. But rather than encouraging angel investment, it's actually taxed in our country, believe it or not. As it is, an angel investor is taking a huge risk. And on top of that, before any returns have been arrived at the point of investment, if it is taxed, why will anybody invest? And this in a global environment where other countries like UK, Canada, Singapore are offering all kinds of incentives to get Indian entrepreneurs to relocate to their countries. So surely we should make it more attractive and hospitable environment for these companies to come in and nurture them through the first 3 or 4 years. So taxation in terms of how it is incident on these companies, taxation on the investments that are being made into these companies, and how do you ensure that it's not there at the point of investment. Right. Nobody says that tax should not be levied at the point when the money is made, but not before it is made. And the third is the regulatory compliance part. The second large part of our asks in the budget are with regard to the large companies, where the expectations are not in terms of any incentives or things like that, but it is more in terms of how you streamline the process in some of the large areas, like for example the way SEZ benefits are applied. There have been a bunch of issues. Right. Of course, the government has been very proactive in addressing some of them, and I think those are definitely praiseworthy, and that's the way in which these issues can be addressed. The second is in areas like transfer pricing, where the advanced pricing agreement mechanism with other countries, especially the US, needs to be worked out. We've had issues in the recent past, especially after the earlier agreements were allowed to lapse. And then the third is in terms of the aggregation of the income across the globe, which makes life easier for both the Indian MNCs as well as other MNCs operating in India. So these are some of the kinds of issues. The second is on the demand side in general, to make tax incentives available for investments in IT, which are being made by a company which invests in IT, for example. Today, if I'm a big business and I invest in my plant and machinery, I'm entitled to certain tax benefits. But if I invest in IT, I'm not entitled to those tax benefits.
Considering that IT is becoming such a large proportion of capital spend.
Yes, and I can't be an efficient industry if I don't invest in that. So what is the message which is getting conveyed when you say, if you invest in setting up an industry, I'll give you money as long as it's not IT. So I think these are some of the things which need to be addressed, because at the end of the day, these signals are important. There are also issues about the benefits relating to employment, benefits relating to training expenditures which are incurred, etc., which strangely are applicable to large companies but not applicable to small companies, because you either need to have more than 100 employees, but all startups employ only about 10 people. So these kinds of anomalies have crept in, and all of these have been listed and pointed out, and I think they need to be addressed systematically. And the last and the final point, and that's a very important point, is that a large part of the digital India and the domestic market is outside of the government. And government's role in that area is to encourage the migration to the digital mode and ensure that that migration is beneficial for everybody. At the very least, it is not adverse to the migration, and that the tax regime needs to ensure that transactions which are carried out in a digital mode are not put to a disadvantage vis-a-vis transactions carried out in the physical mode. So these are sort of the main highlights of what we have projected.
With a special emphasis on the small guy.
With a special emphasis on that, because that energy we believe is extremely important for the country. but the facilitative environment for the large industry also is extremely important, both for the industry as well as for the country itself.
Well, I also spoke to Sangeeta Reddy, Joint Managing Director of Apollo Hospitals, and asked her what she expected from the Union Budget 2015 and more specifically what could be done to expand the composition of healthcare spend in India.
So we definitely expect this great positivity in the government, in the ministry, in all the circles. So I think we're expecting steps which will first allocate a larger amount of money. Being under 1%, 0.9% of the GDP for healthcare is actually a shame. We need a deeper allocation, a minimum of 2%, so that our rural health centers get better. Urban and rural patients who are denied basic medication have access to that. There's testing, there's prevention, there's a range of things that need to be done. We need a bigger budget.
Okay.
The second is that the private sector, which is fulfilling
Medicare
a significant role, bearing that role, they need incentive to bring in more money into the sector, and therefore priority status for health sectors is very, very crucial. The third thing I think is finding methods to enable individuals to take deeper responsibility for their healthcare. So I think being able to spend more on preventive healthcare and therefore a greater tax write-off for preventive healthcare. Definitely the need to show compliance in terms of certain parameters of things that you know. I think it's very, very important for us to find top-up insurance for people. So, they're doing basic insurances at different levels and people are thinking, okay, I have enough, but you need a top-up insurance. And then a move to create outpatient insurance as well, because you're covering only certain hospitalizations, but a lot of things in the outpatient area need coverage as well.
Right. So you're saying insurance incentivize patients to take more wellness programs or wellness related covers.
Correct.
But on the other hand, what about the infrastructure itself? Are you looking at anything specific there? Or?
So priority status is really the single point which I made earlier, which when you get priority status, this will enable deeper infrastructure, more infrastructure to be built. And attract more money into healthcare. We need to build 100,000 beds extra for the next 5 years at least to reach the WHO norms of adequate patient to or population to bed ratio. So this needs capital, and that capital has been scarce in coming. And therefore, we should ensure that the government finds ways to encourage FDI as well as local entrepreneurial capital to go into healthcare. And treat healthcare like an infrastructure.
Okay, so is there any one specific way that could be done, the entrepreneurial part and the FDI?
So by naming healthcare as a priority status,
so
giving it that, that takes care of all the benefits that would come under it and will therefore spur the investment into the healthcare sector.
So, and if the budget were to be expanded, what's the one area where you feel it's crying to be diverted to or directed to?
I think the very clear pockets of underserved areas where, various states, emergency medicine and highways. I mean, why should we lose people on highways just for want of healthcare? We're not, we're supposed to be the world's largest economy pretty soon. We should take care of the health of people. So I think highways and emergency medicine is a very crucial one. The other one really is the whole creating the digital infrastructure for better healthcare. So for the government has already done some work in terms of standards, and we at FICCI were part of it. There's a lot that can be done further. But NASSCOM and Nat Health are together working to create the vision for a digital health India. So EMRs, EMR hosting, PHRs, ubiquitous access to health information, interoperability of transfer of records, all these are part of that agenda. And if the government could set aside like a priority digital health mission, and this covers telemedicine to rural India, telemedicine access in community service centers, all the way up to advanced EMRs, registries for transplant. So all the people waiting for transplants, how do we do the cross-matching better and faster? There's a range of things in Digital Health India, which would need an appropriate budget allocation, and I would really, that's my one dream project.
Well, Sangeeta Reddy of Apollo Hospitals there telling me that a lot more investment needs to go into India's healthcare sector, not just in more beds in hospitals, but also things like better highway care centers. That's all we have time for on Policy Watch this week. We'll be back next week, same time, with the Union Budget 2015. Thanks for watching.